Why did the crypto markets crash? Are you asking the same question as I do? Red is everywhere in the last week. This is the price change of cryptos in a period of 1 week. Everywhere we see 2 digits percentage loss. Was this expected? Can we forecast this? Was this in the charts in the making? Or this move suddenly surprised us? All this and more we will try to answer today. Let's not live in fear that is all around the crypto markets these days. We will take a look at Crypto Fear and Greed Index to see where we stand in our sentiment. And I think you probably can guess what the sentiment is. Also, what technical analysis will tell us and what the weekly chart of the total crypto market cap is hiding. I will give you answers. I will give you the truth so that you keep calm and not be a part of the fearful community. So after you subscribe to this channel and before dig any deeper into this matter, let's roar. What our Crypto Fear and Greed Index is showing us today is fear. Yesterday, fear. We are at 38 at our index. Why is this significant? Well, just last week we were at extreme greed, and last whole month we were greedy by extreme levels. So as you can see, we had quite a pullback. It's very interesting to see how people can be extremely greedy one day and the second day fearful. People's emotions and sentiment are so fragile and, well, by this chart, very easy to manipulate by. Now let's look how this fear of 38 look at our chart of the Crypto Fear and Greed Index. First of all, we took a 1-year approach of the sentiment, so we are having the data of the last 1 year in the crypto markets. For a few weeks we were hovering around extreme greed as Bitcoin broke the resistance. As we flew up, people's appetite and greed also grew up. But we also know that people are greedy, that also the downside has to come. The greed cannot last forever. So as we stated, we are currently at 38, but take a look in the grand picture. Look left when we were in that state a few months ago. So the channel that we were hovering in for a few months is now active again. This is about a neutral territory, flirting with fear. What I am expecting is, since we are in a bull market, that levels of extreme fear should not be seen very often. So after a little consolidation in the neutral or fearful territory, greed should come in the next peak. So we will see how long we will be in this box, in this territory, let's call it uncharted one, where people are neither too greedy, neither too fearful, and where their sentiment is mixed. As I said, after a little consolidation, my expectancy is going up. But why are we here? As I ask the question on the level of crypto markets, why did we have a crash? And could we predict it that after this extreme greed will come fear? Well, yes, we could predict it, and now I'll show you the line that will tell you that. So this is the line that I was talking about, and this is the resistance that was hit many times in the last year. In October of 2019, we touched the line and pulled back. February of this year, we crashed hard to the biggest crash of the March. And by the probability, and as expected, we touched this very strong resistance and crashed to our current levels of 38. Of course, when we meet this resistance line in the future after a few weeks or even months, you can expect the same thing. Keep an eye on this line that is holding and pushing people's emotions and sentiments down. And now let's head to the weekly chart of the whole crypto market and let's see where are billions in crypto heading. First of all, let's take a clear chart and look at through the price action where our market cap of the total cryptos are heading. If you follow this channel, you know that the weekly chart is my favorite chart because this is where I get all my answers, and for me this is the best time frame because it's neither too big time frame, neither too low time frame. I'm also using monthly and daily chart, but weekly is the bullseye for me as long as I'm concerned. You may be having different experience, but every trader, investor, or whatever you want to call it, is different. Well, first of all, let's talk about the price action, the highs and the lows. On the New Year's of 2018, we made our peak, our all-time highs. If we follow the price, now what's to come on this chart is the defining pivot moment that was signaling that the downtrend has started. And as you can see, from that point on, we had what? A lower high than our previous high. And I would say this is the move all the way to the end of the year, where we had our lower low. So, a lower low than previous low. After that came our lower high, but here the trend somewhat changed because this low was a higher low than the previous one. So the momentum, the trend changed. I think we can deduct that from this point on, in the March of this year, the bull run has started. Very slowly and very secretly, but with this price action, we can say that it is. Where are we now? In our current day and age, we are forming a high that is at the same level, maybe a little higher than this. Yes, it is a little higher than this high. And this is the success as the confirmation in an uptrend. Of course, if we take that this peak was some pivot point that we needed to surpass, then this is a higher high than this one also. Conclusion, no matter the recent pullback, we are in an uptrend. Let's erase this and watch the chart to the support and resistance lines. And for that I will call my good friend Mr. Fibonacci. First of all, we will take a high of the bull run of 2017 and the low of the 2018 for measuring the Fibonacci retracement. Bingo! Why is it a bingo? Our first level of resistance was at 23.6%. That was around $277 billion. Our second level of resistance at 38.2% of retracement is at $385 billion. This is where we currently found the resistance and the level that we are fighting right now. So Fibonacci is again showing us the way of the crypto market. And this is one of the reasons why we're heading lower. Let's raise Fibonacci so you can clearly see what I'm talking about. First time we resisted. And now the second time we resisted. So where are we heading from this resistance? It's clearly pointed out to us. When we fall down from the 2017 bubble, we found support at this level. We found it again, little resistance, and the list goes on and on and on until this breakout. Clearly, I'm expecting support at this level above 278 billions. So these levels are not absolute, but they are just indicating in general that we should go a little lower. We can also take another perspective. If this doesn't point out enough support, let's go to the moving averages. As you know, 20-week moving average is my favorite and the more indicative of the trend that we are currently in than others. You can see that this area where we broke below it was our bear market of 2018 and 19, clearly resisting us, pushing us to the downside. Now after we broke to the upside to find a successful bull run, we should find the support at this 20-week moving average. At the August of last year we didn't, but we gone below the 20-week and again was facing with resistance. Now this black swan event is one big mess, let's call it like that, and something that didn't respect the TA, that didn't respect anything or anyone. But after a breakout, now is the time to find our support at this moving average for the successful, powerful bull market. All eyes are pointed at this line. The line is at $294 billion. We should fall down and find a strong support out of it. After that, moon, rockets, fireworks. So as we currently stand at 327 billions and moving average as standing at 294 billions, there is little room, some room that is necessary for us to lose of billions. We should go down by the probability in the next few weeks and then strongly go up if we find support, and I think that we finally will. So why did the crypto markets go down? Because we faced a strong resistance, because we flew far away from this moving average. Let's cool off a little. Let's get back to this median and then we can go on our upward trajectory to the moon. Do you think that crypto markets will bounce off this 20-week moving average? Let me know in the comments. Also, if you like this idea, smash the like button. And until the next video, the Cryptosaurus is roaring with you.